Good morning, ladies and gentlemen. This is Bachorak, Options University. It is Monday, October 22nd, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation of offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. So with that, we see that as we looked at the last week, there was a number of things that came up that certainly moved the market. One of them, of course, is the jobless claims, which came out on Thursday morning, and they were disappointing. And we saw the Philly Fed survey come out, leading economic indicators. None of this moved the market all that much, as the market was down a little bit. Thursday was a big day in the market, though, as later Google came out and gave us its results. Existing home sales didn't do much for the market Friday morning, as we saw the market close down for the week. As we take a look at this week to come, we see that we have not much happening on Monday. On Tuesday, the famous FOMC meeting begins, and we see Fed Manufacturing Index for Richmond, which probably won't move the market all that much. As we come out on Wednesday, we see that Wednesday, the announcement, this is the important one right here. 2:15 p.m. the FOMC meeting announcement comes out, and this can certainly move the market. We have, like we do every Thursday morning, jobless claims on Thursday morning. Pending home sales come out at 10 o'clock, and as we come into Friday, we get the GDP and consumer sentiment, which has certainly been holding up strong as we head into this election countdown, as we'll see what kind of effect that will have with the overall market. As we look at the S&P, look at that big old red candlestick Friday, as we saw the market sell off Friday with disappointing earnings. As we looked at the week, we are still in our sideways trend. We are sitting on support, or very close to support. We could see this gap down a little bit on Monday morning, and then we'll see whether we start heading back up if we continue in this trend. If we break down any further than this level right here, we're going to start talking about a downtrend. How far down can we expect to go? Well, our first stop will be down here right at about 1410, actually a little below 1410, and we may even see basically right around 1386, somewhere in that area. So that would be the next stop, as we would be switching from the sideways trend to a downtrend. If we're going to head back up, that'll hold us in this sideways trend. Currently, we are in a down cycle, in a sideways trend, and should be due for a bounce on Monday morning if we're going to continue in the trend. So watch carefully that first hour and see after that first hour where the opening high, opening low is, and if we're trading on either side of that opening high, opening low, can give you an indication of where the market's heading. Again, we are headed for another crucial day as far as trend is concerned in the overall market. All right, let's take a look at a little more detail. We saw that as the week developed, we were in a nice little up cycle, heading up to that previous high right at there about 1474. And basically what happened is Thursday we started getting news. All right, Thursday morning we missed the earnings, or rather the unemployment numbers, and we saw that the unemployment was down 28,000, much greater than what was expected, and there was about 28,000 less than what was expected, so the numbers did not come out good. And then as the afternoon went on, even though we had gotten a little bounce off those unemployment numbers, what came out is Google leaked out during the markets, and Google did not paint a pretty picture as it turned out its numbers, and the market sold off. And then what happened the next day on Friday is we continued on down as we got ugly moves out of the market, as many of the market leaders were punished as the week goes by. Basically, during the week, we had 117 companies in the S&P 500 that reported third quarter results, and the results are down about 4% year over year from last year. So last year, roughly, we had 68% of the companies that beat earnings expectations, while 42% were beating sales expectations. And right now, what we're seeing is, instead of 68%, we're seeing 63% beating earnings expectations. And instead of 42% beating sales, we're only seeing about 38 to this point so far. So at the moment, the earnings are not looking all that great. Looking at large cap companies like Intel, IBM, Google, Microsoft, General Electric, McDonald's, none of them have come up with a very bullish scenario and have added to this bearish sentiment. So we see that we had a bit of a sell-off, gave us our pivot on Thursday and confirmation on Friday, as we get that big candlestick going down on Friday, and the market is sitting at support. So watch carefully. Monday will be a key day for us as we see what happens after the week after options expiration, as we enter into a whole new options cycle. So with that, let's take a look and see how the Dow did. Dow is still trading well within that sideways cycle, and we see it also is sitting on support. Looking at the NASDAQ, which got punished a little bit more, we see we're way down there, sitting on support just above 3,000 with the NASDAQ. But notice it had a huge down day, down 2.19% for the day, as the NASDAQ was down 67 points on Friday, headed for that 200-day moving average if we don't get a bounce. And then we'll see whether the NASDAQ chooses to stay above that 200-day moving average. Looking at the Russell 2000, we see that we are had a big move, gap down at the open, and continuing down, and we went below that lowest low we had for the entire week, giving us down almost 2% for the Russell 2000, as we see it continuing in this what we would call a downtrend in the Russell. All right, what kind of news will it take to move the market up as we head into this new week and new quarter, as far as the market is, the new month, as far as options expiration is concerned? Next, let's take a look and see where we are with the indexes for the year. As we look at the Dow, NASDAQ, S&P, and the Russell 2000, we see that the change for the week: Dow is up a little bit, NASDAQ punished, down 40 points, S&P still up 4.6%, and Russell down only 2%. Looking at it for the year, we see that Dow is still up 9%, 15% out of the NASDAQ, even though it was the big loser for the week. S&P down are up 14% for the year, and the Russell up around still double digits, 10.8% for the year, as we see the NASDAQ certainly led the market down as we went through that first big week of earnings. As we look at next week, we certainly will be looking at more earnings, as we have about 700 companies providing us with earnings in this next week. And of those companies, the most interesting to us, of course, will be Apple, as it reports on Thursday afternoon. So big week in the market. Remember, this is Applenomics, so we'll see whether Apple is able to carry the whole market up with it on its back. All right, looking at the VIX, we see that the VIX certainly shot up on Friday with that big up day, still only at about 17, well within the normal range for the VIX, as we look at the pop up in the VIX with the downtrend in the market. Looking at the bonds, we see that as we look at the bond market, it rose as the market pulled back and got a bounce off of that 200-day moving average. So TLT gave us a buy signal on Friday as the market pulled back. If the market continues, you should be able to watch the bonds rise a little, but of course the bonds certainly are in a downtrend, as we've been watching these pull back further and further as the weeks have been going by. Financials held up relatively strong, still trading above the 30-day moving average, and we're bolstered by Citigroup and a couple of the other financials giving us some decent numbers, and of course ultimately bolstered by the Fed and the Fed policies. As we look at oil, we see that oil had a big ugly day down as the oil pulled back with the overall market. Looking at USO, we can see that we're headed for that previous low of 32.50 if the market continues to pull back. Looking at gold, we're at that time of the year where you can get gold, the safe haven, to move the same way as the market does, as we see the market pulling back and gold still pulling down after we reached some real highs there about 2 weeks ago. So gold pulling back and pulling back on volume, sitting at that 50-day moving average. We'll see if that is a bounce point for gold as we go forward. I'll watch that first hour and see where we are for the opening high and opening low. And finally, let's see what kind of volume we had Friday on the S&P. As we look at the spider, and we see that we had greater than average volume as we had this big pullback to that 50-day moving average. Still a little bit of room below us to still stay on our sideways trend, and we'll see whether we get that bounce Monday as we head into the Fed meeting. And then, of course, we never know what's going to happen after the Fed meeting. Not expecting too much this week as they had a big announcement of QE3 from before, so don't expect too much out of the Fed as far as new news as we go into Fed announcement week, which certainly moves the market. 700 companies reporting certainly can move the market, and Big Apple reporting on Thursday, so it'll be an interesting week with all of our normal economic announcements and these special big time ones like Apple, like the Fed, certainly can have an effect on the market. Could we get a bounce? You bet we could. Get the wrong news, which way we going? Lower, and we'll go in out of this sideways trend into a downtrend. Are we toppy? Time will tell. So far what we've seen is we've seen the election hold this up at, what are we, about 14 days, 15 days until election day, so that too will no longer be new news and will give us the answers as to what the next regime will have for us and for business and what effect it will have on the stock market. For those of you who have gold members, stick around. We'll talk about our stocks to watch, see what happened during this week. Some of them had earnings, others are still coming into new earnings, and stick around. For those of you that are not gold members, if you'd like to see more free videos, go to www.optionsuniversity.com/free gold. And for the rest of you, thank you for being here. This is Butch Shorak, Options University, Monday, October 22nd, 2012.